Hello traders, welcome back to the Forex Geek. In today's video, we are going to be talking about the paper umbrella to candlestick pattern. This formation signals potential market reversals across all time frames and markets. You will learn how to identify this pattern, understand its significance, and implement it effectively in your trading strategy. By the end of this video, you will be equipped to spot high probability trading opportunities using the paper umbrella pattern. Let's dive in and enhance your trading skills. So we'll talk about the paper umbrella basics. The paper umbrella candlestick is characterized by a small real body and an upper end and a long lower shadow. This is what it means, as you can see from my screen. It's characterized by a small real body and an upper end and a long lower shadow. The shadow must be at least twice the size of the real body for a valid signal. The color of the real body isn't crucial, but it can provide additional confirmation of the potential trend direction. When identifying a paper umbrella, focus on these key components. 1. A small real body at the top of the candle, a long lower shadow at least double the size of the body, and the candle color which can reinforce the signal. So this is exactly what we are talking about in the paper umbrella basics. The hammer pattern occurs when you spot a paper umbrella at the bottom of a downtrend. This formation suggests potential bullish reversal. The long lower shadow indicates that sellers pushed price lower during this period, but buyers regained control, closing price near its high. And on the flip side, the hanging man pattern appears at the top of a trend. While it has the same shape as the hammer, its position at the top or at the end of an uptrend signals a possible bearish reversal. A long lower shadow in the context shows that sellers are gaining or are beginning to enter the market, potentially exerting the upward momentum. So let's see how we can implement this strategy in our day-to-day trading. Now that you understand how to identify the paper umbrella pattern, let's focus on implementing an effective trading strategy. The key to success lies in proper timing, risk management, and profit targets. For a hammer pattern, consider entering a long position after confirmation. This confirmation often comes in form of a bullish candle following the hammer. Place your stop loss just below the hammer shadow. Place your stop loss just below the hammer shadow. So let's look for an example. The low of the hammer candle. So enter our trade after confirmation and we'll put our stop loss just below the hammer candle. This is what it means to protect our trade. When trading the hanger man pattern, look for a bearish confirmation before entering a short position. We look for a bearish confirmation before entering a short position, and as you can see, we saw a bearish engulfing. We have to set our stop loss above the high of the hanger man candle. We place our stop loss above the high of the hanger man candle. For both patterns, Determine your profit target using a risk to reward ratio of, let's say, our common approach can be 1:2, meaning your po ten tial profit is twice your risk. You can use previous support or resistance levels as a take profit point. This is where you take profit, previous support or resistance level, or you just aim for 1:2 risk to reward ratio. Remember, no pattern works 100% of the time. Always combine these signals with technical analysis tools and fundamental factors for more comprehensive trading approach. Alright traders, we have come to the end of this video. If you found this video information valuable, please like, subscribe and turn on notification for more trading insight. Thank you for tuning in, and until next time, happy trading.